dollar cost averaging into Bitcoin. So in this video, I will explore how various dollar cost averaging strategies would have performed. I'm Kieran from CryptoBoost, and I'm really happy to have you here with me today. And first of all, I'm going to explain what dollar cost averaging is. So dollar cost averaging is a strategy that allows an investor to buy the same dollar amounts of an investment on a regular interval. So the purchase occurs regardless of the price's asset, and that's fantastic because it eliminates all emotions. Now on this website, it's called dcabtc.com. I'll link it down below so you can try it out for yourself. And here you can put different parameters and an experiment and see which one works for you the best. So here I've got an example of purchase amount of $10 US, and it repeats this purchase daily. And here is the settings, like for example, here I've got 4 years, so 4 years ago. However, you could also do 5 or 6 years ago. And you would also accumulate for 6 years and starting 6 years ago. And here you see the total amount that you invested, the total value of the investment now, and the percent change. So that is pretty dramatic, especially if you started 6 years ago. That's a massive change. Now, of course, in this scenario, you're not really looking at the market. If it goes up or down, it doesn't matter. You're just buying and buying. And you could have had like a massive amount of money would you have taken it out at the end of 2017, because during 2018 we had this very big bear market, so the portfolio value dropped significantly. But that's not the point of this video. The video is more to show you how actually dollar cost averaging works. So here what you could also do is you can, let's change this maybe to 4 years. 4 years ago and accumulating for 4 years, and then change this maybe to weekly. And let's say I've got a budget of $100 US, I can put in weekly. So that means after 4 years time, I have invested $20,900 US, and the percent change is 823%, which is a fantastic compared to other investment classes. But please keep in mind, this is not investment advice. This is not financial advice. I'm just showing how dollar cost averaging works. Now, the reason why you should use the dollar cost averaging approach is it eliminates all emotions. So even if the price is going up or going down, it doesn't matter. You set a defined a time frame, and you repeat the purchase based on the time frame that you selected. So the primary reason for implementing a dollar cost averaging strategy is to minimize risk by neutralizing short-term volatility. By dollar cost averaging, you can remove emotions from the process and stop worrying about trying to time the market. So many people, they believe that the price might fall a certain amount, and they decide, okay, that's when I'm going to go in the market. But as you can see now with Bitcoin and this massive rise that it's had, many people were speculating that Bitcoin is going to drop again to 4,000 or 3,000 US, and they might have completely missed out on this short-term bull run, and they are kicking themselves at the moment. But if you have a strategy in place where you say, oh, it doesn't really matter what's happening in the market, you're just going to buy, for example, $100 US worth of Bitcoin every Monday morning at 8 a.m. There are different exchanges which also offer this possibility to dollar cost average, and you can select everything. Bitpanda is one exchange which offers this, and I think that's fantastic, and it's something that I'm doing. So you can head down to the website. I'll link it down below, and you can try it out for yourself and see which strategy works the best for you. You can also try with different budgets. If you've got a lower budget, for example, $2 a daily, which is maybe the cost of a cup of coffee, and then you still, let's do 1 year. Even after 1 year, investing would you have started at the beginning of this year, then you would have actually last year, then you would have invested $730 just by dollar cost averaging with amount of $2 per day, and you would have had now a value of $1,176, which is a 61% change, and that's a very healthy growth, especially comparing it with other traditional assets where 61.2% growth is just mind-blowing. But of course, there are risks attached to investing in general, but with the dollar cost average, it helps to mitigate this risk a little bit. So here, just to close this video, some benefits of dollar cost averaging. First of all, dollar cost averaging provides three key benefits that can result in better returns. It can, first of all, help you avoid mistiming the market. Second of all, it takes the emotions out of investing. And third, you think longer term, which is very important. In other words, dollar cost averaging saves investors from their psychological biases. Because investors swing between fear and greed, they are prone to making emotional trading decisions as the market changes direction. So FOMO is all too real, especially in the cryptocurrency space. And that's why dollar cost averaging is actually a fantastic investment strategy to use to eliminate all emotions in the market. So I hope you found this strategy interesting. If you've got some tips or you've got some questions that are unsure about anything, then don't hesitate to ask that and post your comment down below. I'll gladly reply. So have a great day, and I'll catch you on the next one. See you soon. Bye bye.